Our fish strategy is clearly a niche product in the financial markets. It is therefore not easy for fund platforms and investors to categorize it. Time for us to help a little. Within the Bloomberg BICS classification system, our strategy is clearly linked to the defensive consumer staple sector at level 1. If we break down further, we end up with an 85% allocation in the food sector. This makes it clear that we invest in companies that produce food on a daily basis. In terms of country allocation, the strategy focuses on growing aquaculture nations such as Norway, which is part of Europe. Global diversification is emphasized with investments in Asia, Japan, Thailand, and South America, where we have investments in Chile. In terms of company size, the strategy consists of small and mid caps, which together account for over 80% of the allocation. That aquaculture operators and the supply industry are not yet large caps is due to the quite young age of the sector. Nevertheless, the companies are mature and pay high dividends. However, what the fish strategy does not stand for is it has not a high exposure to the US markets, nor to large caps, nor to the technology sector. These are all narratives that have significantly driven global stock markets over the last 5 years. When global money allocators start to rebalance out of the sectors and market segments that have done well, the fish strategy will benefit from inflows. Similar to the classification of fish, benchmarking with food indices is not easy. Nevertheless, a comparison shows that the last 3 years have not been profitable for investments in global or region-specific agriculture and food sectors. Despite the resource tax in Norway, difficult political circumstances and the effects of the weather phenomenon El Niño, the fish strategy has in relative terms performed best. In the food sector within consumer staples, it is therefore worth staying with fish even in difficult times.